So how does one get started in options trading? Options trading isn't to be entered into lightly. As with all financial investing, it requires research. You should educate yourself on the strategies even as you gain experience. But let's explore the essential steps needed to get started. Step 1. Open an options trading account. The first thing you need to do in order to start trading options is to open an options trading account at a broker. If you're already investing in stocks, you've probably already using one. However, there are many brokers to choose from. It's in your best interest to review the pros and cons of each to see which one best fits your goals. For example, some may offer lower commissions. Others may have a more user-friendly trading platform. If you like the broker you have, great. If not, explore a little. Some proper broker services are E-Trade, Robinhood, Ameritrade, Interactive Brokers, just to name a few. As with all investments, your broker is going to ask you some questions about your assets and trading history. This gathering of information will be used to help determine your risk level so they can determine what level of options trading to allow you to do. Not all options trading strategies carry the same risk. Some options, such as a covered call, are very low risk, while other options, like a naked call, are extremely risky. For this reason, most brokerages have different levels you will be approved to trade at, which limit the types of options you can open. Using E-Trade as an example, there are 4 options trading levels: 1, 2, 3, and 4. Level 1 is going to be the lowest level, and it will allow you to do covered calls sold against stocks held long in your brokerage account, buy writes, which is simultaneously buying a stock and writing a covered call, and covered call roll-ups, roll-downs. That's it. There aren't any other option strategies you can do at level 1. Level 2 provides the strategies I just mentioned for level 1, but also adds some additional capabilities. These include synthetic long puts, married puts, long calls, long puts, long straddles, long strangles, covered puts, and cash secured puts. I know that sounds like a lot of strategies, but there's actually even more. If you're approved for level 3, you get all of that plus debit spreads, credit spreads, calendar spreads, diagonal spreads, naked short puts, butterfly spreads, and iron condors. Most of my trades fall into these strategies, and if you're at level 3, you can do almost all of the different option strategies that are available. But there is one more strategy it doesn't include. Level 4 is the highest options trading level at E-Trade, and it adds just one more strategy to your toolkit: naked calls. A naked call carries the same level of risk as selling a stock short. Many traders have gone bankrupt from bad trades like this, and it's extremely risky. So I wouldn't worry too much if you're not approved at level 4. Okay, now that you've signed up with the broker and received your options trading level, what's next? Step 2, pick the stock. Now that you have an account and your broker has assigned you an options trading level, you need to select the stock you want to trade on and the options you're going to buy or sell. Don't just pick stocks at random. You want one that has an active options market and something that has been trading for a long time so that has a little stability. And once you've picked out your stock, you need to consider what patterns it's exhibited recently. What's going on with the business and the market it operates in? Which direction do you think the underlying stock will move? These are all considerations you will need to make in order to determine the type of option strategies you select. Will the stock price rise, decrease, or not fluctuate much at all? Also take into consideration your goal. Are you looking to make income from selling option premiums or to offset risk of a potential loss? Step 3, choose your strategy. Now that you've picked a stock and you have a good feeling for its pattern, you need to select the right option strategy for it. There are an abundance of strategies you can choose from, but each is best suited for a certain stock pattern. With so many strategies available, it can at first seem intimidating and you may be unsure of which one to use. Start with something simple. Build your knowledge and take the time to learn what will work best for you and your goals. Review the risk versus reward. Know what you're prepared to risk so that you can cap the loss potential. Also think about implied volatility of the stock, as this plays a huge part in pushing up the price of premiums. Step 4, determine the time frame of the option. Time value is such an important part of an option's pricing, and every option has their own individual expiration date. Options that expire in a short time frame, such as in a matter of days or a week, tend to be considered higher risk. This is because if the stock declines or rises rapidly, there may not be enough time to recover before expiry. Longer option expiration dates provide more time for the stock to move and your strategy to play out, potentially in your favor. Step 5. Determine the option strike price. When you enter into an option contract, you have to think about the direction you expect the stock price to go. You want the strike price to reflect where you predict the stock will lie during the lifetime of the option. This will also help you determine the best strategy of buying or selling puts or calls in order to maximize your position. Step 6. Place the order. You've opened an account and you've evaluated your risk tolerance. You've chosen a strategy and selected your strike price and expiration date. Now it's time to place the order. Once you've entered all of the information, double check everything. Make sure the strike price, expiration date, number of contracts, even the stock symbol are all correct before you place that order. Don't rush it. If it's your first trade, you're probably feeling a little nervous right now. Did you calculate your maximum risk? Are you comfortable with it? If you know your maximum risk, then you have nothing to worry about. Step back and watch and see if your strategy goes the way you expected. As you approach your expiration date, you can evaluate how it's performing and utilize your exit strategies if the situation calls for it. And that's it. It's that easy to start options trading. Now, if you've never traded stocks before, you should probably wait to get into options trading. Options are a derivative of stocks, and you should really have a good understanding of how stocks works before getting into it. Options carry a higher level of risk than stocks, so your brokerage isn't likely to let you start options trading without some stock experience. Or if they do, it will only be on a very limited basis. If you do have experience with stocks, then options might be a good next step in your trading evolution. I hope you enjoyed this video, and if you did, please hit that like button. Also, make sure you subscribe to see more great videos just like this. And if you have any questions, post them in the comments, and I will be sure to answer them. Thanks for watching.